Hopes for a reversal are being dashed as intensifying strikes in the Middle East and energy market turmoil continue to drive uncertainty. The intensifying strikes in the Middle East are causing significant market volatility and risk aversion globally. The energy market is at the center of the crisis, with supply concerns pushing crude prices higher. Amidst significant volatility, reports indicate cuts to crude oil production and limited storage capacity. Exacerbating supply fears and price pressures, crude prices are lifting higher with significant intraday volatility as the supply-demand balance remains tight and uncertain. Against this backdrop, we've seen widespread impacts across major financial metrics, particularly in equities, bonds, and currency markets. Equities experienced declines across most major markets. Globally reflecting the growing risk-off sentiment, longer-dated government bond yields rose across the globe, suggesting reduced demand for safe haven assets or inflationary concerns. The US dollar continues to act as a primary safe haven, showing significant strength against other major currencies. The US dollar index, or DXY, closed above the 100 mark for the first time since November 2025. Highlighting its pronounced climb this week, the world's attention turns to central banks as they are poised to make crucial policy decisions. Central banks from most major economies have policy decisions scheduled this week, a critical moment to assess their stance. These decisions will offer key insights into the central bank's reaction functions. In the midst of this escalating global crisis, a significant and concerning escalation occurred in the Persian Gulf on Friday evening, directly impacting global energy supply. The U.S. conducted strikes on Kharg Island, a key facility responsible for processing Iran's crude oil exports. This marks a significant escalation targeting the island responsible for around 90% of Iran's crude oil exports, predominantly shipped to China. Stay tuned for further updates as markets digest this escalation and anticipate central bank responses this week.